loud. All right, so now it's recording. So I'll go back to share. Where to go? Where to go? Is that it? No, that's not it. Hang on. Oh, it is it. That was it. Hang on a second. With my there it is. Hang on a second. All right, so people who just joined, if you're watching this, I went. I just started before I forgot to record it, but I'm going down this list of items to figure out which statements which goes on. Maddie's walking me through this. We concluded sales revenue goes in the income statement. Unearned revenue, which is when someone pays me cash before I've done the service, that's a balance sheet item. Accumulated depreciation is on the balance sheet. And accrued revenue is a balance sheet item. That's when I've done the work before I got paid. Okay. So now everyone's caught up. Salaries and wages, Maddie.
Is that balance sheet?
That is, doesn't say, maybe I should have said expense here, but it's a P&L. If I said expense.
So income statement.
That's income statement. Right, yep. Income tax expense.
Is that also income since it's
It is. Sales returns and allowances.
Is that income?
Yes, it's income statement. Right. Cost of goods sold.
Is that still income statement?
It still is the income statement. And the good news is, I mean, we start with the tough one, but then I'll move on to the other folks. So I accumulate depreciation. That's a double somehow. Dividends.
Balance.
It's not, well, it's not the balance sheet, but it's not the income statement either. So it's the. We're giving Coley as your backup when she sits at your table. Where's the dividends go, Coley? What statement? You're on mute.
Retained earnings.
Retained earnings, that's right. Yep. Other operating expenses, Maddie?
Other operating expenses. Income?
Yep, income statement. Freight, here's some tricky ones. Freight in.
Income?
No, freight in is, you know where freight in goes? You know what freight in is? Well, either Maddie or Coley. Like your table there. How do we account for freight in? Or anyone can raise it. These are tricky ones here, so no shame in any of this. Cassidy or Liam, what's freight in? What do we do with that?
Doesn't it count as inventory?
Right, it does count. We put it. It's a component of inventory. And what statement does inventory go on?
A balance sheet.
That's right. Okay, now back to Maddie. Freight out.
Freight out different, right?
Yes,
So
it is.
Is
Yep.
that one income?
It is income
Okay.
statement, right? That's an operating expense. Interest expense.
Income?
Yep. Interest revenue.
Balance sheet?
Well, it's revenue. It's not unearned or accrued. It's just revenue. So it's sort of like the sales revenue at the top.
Oh, so income again?
It's income statement,
Okay.
and then retained earnings.
Is that on the retained earnings?
Yes, it is, and it's also that one's in two places: retained earnings statement and in the stockholders' equity section of the balance sheet.
Okay.
All right. So if I was to do this, let's see. So if I was to prepare the multi-step income statement, I would do something like this. Sales, revenue. I'll start there. I'll give you that one. Now, Coley, we'll go to you on this one. I'm gonna skip the zeros. Okay. What would go next? Do you think?
After sales revenue, would you subtract sales return?
Yes, I would. Good job. Oh, here comes Here comes my queen, who doesn't want to be on camera, handing me a cup of coffee. Ooh, that's hot. Thank you, Lynn. So sales returns, that's reduction. And that's 20. Hang on a second. Turn down my music. Turn down my music. All right, then what is that? Then what do I do next, Coley?
You would subtract those to get net sales.
Yes, I would. I'll do the math for you. Then what?
Would you do the cost of goods sold, right?
Yes, I would. You're on fire. And that's 398. And then what?
Would you subtract that to get the gross profit?
I would. And then what?
Then you do like your operating expenses, right?
Right, so I've got I see other operating, so I'll do that, other OpEx, that's short for it, okay, 114. Do I have any other operating expenses there?
Mm,
Take your time.
I don't know, wait.
Well, we talked about a couple others, yeah. Take your time.
I'm not sure.
All right, so what is freight out?
Oh, would that? freight
That's an
out count
operating,
as an
that's an
operating
operating
expense?
expense. We'll put that in. And then how about salaries and wages, which doesn't say expense, but that's what it is. So I'll put salaries and wages, S and W. And then I would, okay, and that's all the operating expenses. So then what would I do?
Then, wait. I know, would you have to do like your income before like taxes or?
Eventually I'll get to that. But I think right here, I total up my op expense.
Okay.
All right. That's, I'll have to do it in my head, 174, 199, okay. And then, so gross profit minus total operating expenses, what, Coley? What's the caption for that?
Total operating expense.
So my gross profit minus my operating expenses. Does anyone know what caption that would be? Anybody?
Would it be the income from operations?
Right, it would be. Yes, it would be income from, and I'll shorten it, from ops. And so that looks like it's 1. I don't have all the oh, not 1111. It's just 1. 200 minus 199. All right, then now what, Coley? Yeah.
Now you would do the other like other expenses like the interest expense.
Right, so I'd call these yes, you're right, non-op items, okay, because they could be expenses and revenue. So we'll start with interest expense. And that's 19. And there's one more item that goes in this section. What is it?
Income tax.
No, that's not yet. It's interest revenue, okay? So interest revenue would be if you earn money on your investments. Interest expenses, when do you incur interest expense, Coley?
What was that?
When do you incur interest expense?
Interest expense.
What gives rise to interest expense?
I don't know, when you buy something, like the interest.
It could be, that's because you're borrowing. If you buy some, when you borrow money of some sort. So if you borrow from the bank, you have interest expense. If you bought something on credit that you're going to pay over time, like you were saying, you would also have interest expense. And interest revenue is when you have money in the bank that's earning interest. So then that's 20. And then I'll help you out here. And this will get us to pre-tax income before taxes or pre-tax income. So in this case, it's going to be 2, right? Because the net of the, well, actually, I should probably do this. Non-operating, total non-op. And it's income because the revenue exceeds the expense of 1. So the income from ops plus the total non-op income of 1 is pre-tax income of 2. And now what comes next?
Now it would be the income before income before income taxes, and then the income tax expense.
Right, so I called income, and you're right. I just for simplicity, I called the income before income taxes pre-tax income, okay?
Mhm.
Same line, 2 different ways to describe the same number. And now income tax expense of 30. Did I miss something? I'm just gonna make sure I didn't miss something. I'm doing this at the same time as you did it. So return the allowances. And then when I subtract that, then it's a net loss of 28. And that's because we had pre-tax income, but then we had $30 income tax expense, which is a little bit unusual. But that will give you a net loss of 28. Okay. So how do I calculate then on number 2 and 3, Coley, and then I'll set you free for a while, then it's Cassidy and Liam we'll go to. How do I compute the profit margin?
Profit margin would be the net income divided by net sales.
That's right. So in this case, it's negative, but that's how you would do it. How about the gross profit margin?
Would that be gross profit divided by net sales? Wait.
By net sales, that's right. And not total sales, net sales. You got it right. All right, so you two had Maddie and you guys had a tough one to start with. Let's see. Can I change this? Maybe because I gotta erase all this crap. All right, there we go. Huh. All right, Cassie, you're next on the screen. 57. You might have to do a few of these because they had a tough stop. I mean, a challenging stop. They did great. Yep.
Is it B?
Yes, it is. You guys see that? How about 59?
Also B.
That's right. That would be the best answer, right? Yes, here. That's the only answer that's correct here, right? It could be then. It could also be if I had another answer, operating expenses and non-operating expenses, that'd be a better answer. But for the answers that we have, B is the best answer. How about 65, Cassie?
Is it A?
Yes, it is A. Now I'll give you guys a chance to catch up. Any questions? She's just doing it in rapid fire succession, Cassidy. So did you do this test already, Cassidy?
Yeah.
Good. All right, let's see. One more for you, then we'll go to Liam. All right, what do you think on 102?
I put D.
Let's see, I haven't even calculated this yet, so D. Let's see, so how do you get D?
I did 80,000 and then I did minus the 1,600 from the returned on like for credit.
Yeah.
And then
let me hang on, let me just do this annotation thing, if I can find it, where to go. So that everyone sees it. So there's 80,000 on the purchase. All right, hang on a second, purchase. Less returns
Yeah.
of 1,600. I'm getting really good at typing. I got much improved. I'm up to 30 typos a minute. 1,600. Yeah.
And then I did the 2% discount.
On 70 on 78.4. So how much
Yeah.
is your discount?
1,568.
Times 2. So that's how you did it, right? I agree with. And then what'd you do?
And then I just added the freight cost.
Yep, freight cost. I would do that. Freight in, because that's component of inventory, and that's what, 400. So when you add all that up, what's that come in? D?
Yeah, D.
All right. That is correct. Everyone see that? So the components of inventory is what you purchase. It's what you pay for it plus the freight in. Ultimately, that's what the inventory purchases, and that's what Cassidy did here. The purchase was 80, but they sent 1,600 back, so they don't get the discount on what they sent back. So 80 minus 1,600 is the 78.4 times the 2% discount that they took. So if I guess that would be 7. If I subtotaled that, I guess I could do that. Subtotal. That's what, 76,832 plus what they paid for freight in, and that's the total that goes to inventory. All right. You got that? Any questions before I erase this? There's no, this is a great session to ask questions. All right, Liam, your patients, you're saying, why won't he ask me questions? I'm going to do that now.
That's exactly what I was saying.
What's wrong with me? Does he think I won't get him right?
Yeah.
All right, 132. 132.
Yeah, I didn't get a chance to do this one.
Well, let's do it together. We'll do it together. That's okay. Yeah. So think about it. They sell merchandise. So what's the question? It's how
So-
much? Yeah. What entry does, when they get the check, how much do they, what's the entry they make?
So they initially receive $1,800.
Well, they don't receive 1,800. They sell it for 1,800.
Oh,
right?
okay.
Yeah.
Um,
So let's see. So the initial is 1,800. The
right.
initial sale, which is on credit, right?
hmm
1,800. Then what happens?
Then 600 is returned,
Right, returns. Okay.
and then and that's really it. But then we still have the 210 net 30,
Right. So that, and then the net of that,
with 12. Sorry. So we have
1,200. Okay. Then how much is the discount?
It's 2%. So
How much is 2 times 12?
what? 2 times 12?
Yeah.
24.
Right. So 2% of 1,200 is
Okay.
24. All right. So that gives us discount. That subtotals at this point 1176. Hang on, sorry. What happened here? Anything else happen? No.
Nope.
So, what do we got here? So it looks like, so we know we got, and I agree with you, we got 1176, so now the answer has to be C, B or C, because the others don't have the right amount of cash received, right?
Right.
So what's the best answer?
I would say C.
I would agree with you. Everyone see that? And it's C because we have returns of 600, but discounts of 24, okay?
Right.
So this one gives you returns of 624. Here they aggregated them. That's not an awful answer. It's just not the best answer of the available answers, right?
Mhm.
All right, everyone got that? So sales minus, and again, what you, the sales is ultimately what you receive from the customer. So here they, 1,800 was the initial sale. They returned 600. They only get the discount on the stuff that they keep. So that's the 1,200. Minus the 24 for paying timely. So it's 1176. That's all they're paying you. That's the ultimate amount of the sale, which was, well, initially they recorded $1,800. The initial entry was credit sales, 1,800 debit receivables, right? So this happened since they made that entry. So that's why this is a credit to receivables. And these two will adjust the initial entry to sales, okay? So the net sales on this transaction would be how much? It's the cash that you receive from the customer. So how much is that, William?
Would it be 1776?
1176.
Oh, yeah,
Yeah,
1176.
I know you just misread that. Which is the initial sale of 1,800 less return of 600 less discount of 24. And that's net sales, all right? 1176, which happens to be the amount that they pay you. All right, that's how it works. Where when you buy inventory, it's what you pay plus the freight in. All right. Let's see. So we will do this. We'll go back to Maddie on this one. On 46.
I said B.
You said it correctly. Right, because why doesn't physical possession, why is that not the best answer? So you had the correct answer now, but again, no good deed goes unpunished. I keep pressing you for more information. Yeah. So like what circumstance could you have possession of the inventory, but it's not your inventory?
I'm not sure.
Does anyone have there's a couple of examples.
Wouldn't that be like FOB shipping point?
That's one of the concepts, right? And that's when FOB shipping point, FOB destination. That's when title passes, right?
Right.
So FOB shipping point, it passes Liam when?
FOB it passes once it's shipped.
Right. And even though, so the buyer could have it even though he doesn't have physical possession of it yet, even though it's on like a common carrier like FedEx or a freight truck. I mean, there's all sorts of freight companies. All those trucks that you see on the road, they're freight, they're freight carriers. The common ones we know are Amazon, UPS, Federal Express, but there's endless freight carriers. Also, it could be, we talked about consignment inventory, right? You could drop something off at your local consignment shop, and they have physical, but the consignment shop has physical possession of it, but it's your inventory, right? They're just acting as an agent to sell it for you. All right. Let's see. Oh, LIFO. Let's see. All right, Coley, you're next. Let's do this one here. Did you do this one?
Yes, would it be C?
All right, I don't know. It could be. I have. So how'd you get to C? It could, I don't know the answer, so I gotta work it through. So what are we doing? LIFO?
Yeah,
So what would you do first? How do you figure it? You're probably, I'm no doubt that you're right. I just have to work it through with you.
all right, I'm not sure if this is right, but I added up the units and I got 200 and I subtracted 50 from that because it said I had 50 units on hand. So I got 150. And then I did the,
So then you know that we sold 150.
yeah,
Now, hang on a second. So this is available for sale. I'm gonna say COG available for sale, okay? Cost of goods available for sale is units. Well, I'll add up these prices too. So that's 37.40, 37.80, 41.80. Okay, that's the dollar value of that, okay? And then what did you say, sold 150 units?
yeah,
And how did you, and I think you're right, how did you get that?
150 units. I did 200 minus the 50.
Because they said there's 50 units on hand, so now you sold 150. All right. So now you know there's 50 units on hand. Let's see. All right, now what you do?
So then I started at the top. I did 40 times 20 to get 800,
Uh-huh.
and then 110 times 21.
Oh, you calculate
it-
the ones that was sold. Yeah. That, and I think you did it right. Okay, but I'm not teaching it that way. But I don't want to dissuade you if you understand that. So I'm going to do it two ways. I'm going to do it Chloe's way. So she's calculating what was sold. And so she said, I know 150 is sold because it's 50 on hand. And you know, and why did you start with the top ones? And you're correct to do so, but just explain your thinking.
I don't know, just because I thought because it was LIFO, because you do,
Oh, wait a second. No, hang on, that may not be right. The last in are first out.
oh, do you start at the bottom then?
If you're going to do it this way, but let me do it the way that I would do it, that I've been teaching it, okay? So I would say we have 50 units on hand, okay? So if it's last in, first out, Coley, which ones are still on hand? The earliest ones or the most recent ones?
The most recent one.
No. If it's last in, if the last one's in and the first one's out, right? So you assume those are the first one, so they're not in the inventory. So you assume that the ones that are on hand are the earliest, okay?
Oh, okay.
Because the last one's in and the first one's out, so they're not here anymore, right? So the ones that, so I would calculate the ones on hand, which would be, and there's 50 on hand, you're right on that. So I would do 40 at 20, and that's 800. And then I would do, I need 10 more units, so I take those from the 21. 10 at 21. I hope I'm doing it right. 210. So now that's my ending inventory. Which, well, I'll subtotal that. Hang on a second. When I'm doing this with you guys. Oh yeah, that so that's, yeah, that did give you a 41,820. Okay. So my ending inventory is 1010. So now what's my answer, Coley? Because what I've been teaching is put the cost of goods sold formula, beginning inventory plus purchases, cost of goods available for sale, less ending inventory. You calculate the ending inventory on the LIFO, FIFO, which we did, it's 1,010. So this minus this would be your LIFO cost of goods sold, which is the 3080 B. Okay. Now, and I have a LIFO, if after this, I have a brief LIFO, FIFO calculation on YouTube. I sent that to you guys a few days ago, okay? You want me to show you that video or just keep going? Should probably keep going, it's 4:34, because you guys can go back and look at that video. So again, but I'll focus here. The way to get partial credit by doing beginning inventory plus purchases, cost of goods available for sale minus ending inventory. Put that down, fill in the beginning inventory and the purchases, and that's going to be the same on the LIFO and FIFO. What's going to be different is the ending inventory, okay? Because I might ask you for ending inventory and cost of goods sold. And if it's LIFO, last in, first out, if they're out, then they're not here anymore. Then you want to go to the earliest ones. If it's FIFO, that assumes the first in, first out. That means the earliest ones are gone. So the ones that are on hand are the most recent ones. So I want you to be able to process, think that through. But if you can't think that through, at least memorize it, right? But you should be able to think, hey, first in, first out. The early ones are gone because it's first in, first out. So the most recent ones are on hand, and vice versa for LIFO. That resonating, Coley? All right. We'll keep going. All right, so now Cassidy, 90.
I didn't do this one yet.
That's okay, let's do it together. Yeah.
Okay.
Yeah.
So you would do like the beginning inventory
Yeah,
plus the purchases.
yeah, begin inventory, which is 50. You have to do the units and extensions, so that's 600, okay?
Okay.
Now purchases are
300 times 112,
purchases.
33,600.
33,600,
Yeah.
okay? And
I
then
think the first one is 6,000 and not like 600.
oh yeah, you're right, yep.
Okay.
Thank you.
And then 150 times 115 is 17,250.
How many units we get?
150.
150?
Yeah.
And it adds up to what?
17,250.
250, okay. And then I would add those up, all that up, so I'd have cost of goods available for sale, and that's 500 units. And that's, can you add those three numbers up for me?
Yeah, it's 56,850.
$56,850?
Yeah.
750?
Um,
Do I have the right numbers? It would have to be 750 if I have the right numbers up there.
I think the second purchase is 17,250.
Oh yeah, okay, yeah, too many, yeah, okay, too many numbers, typos, that's my typos, yeah. So now it's 56,850, yes.
Yeah.
All right. All right, now I have to then do less ending inventory. So how do I figure out how many units are left?
You subtract like the sales, I think.
Right, so there was sales of 340 units were sold. What's that doing there? No one did that. So we not, we know there are, so we had 500 units and they sold how many?
340.
So that means we have 140, 160 units left.
Yeah, I think so.
I'm doing this for the, I don't have this all, these problems all come into memory, so I know the logic's right, so hopefully the numbers are right. All right, now we have 160 units. Now what do we do?
So because that's like the amount left on hand, that's the amount you have to use to figure out LIFO.
Yeah,
So last in, first out means you start with beginning inventory.
that's right. So then we do, yes, because the most recent stuff we assume is gone, right? So to calculate LIFO ending inventory, we got to build up there. So we got 50 at 120. And that's what, 6,000. Okay, then what do we, yep,
Then you would do 110 at times 112. So you got 12,320.
then say that again, what's that amount to?
12,320.
All right, so then. Oh, we're supposed to use FIFO.
Oh,
Oh, no, well, actually, this is LIFO down here. If any, no, I'm sorry. Yeah, we're supposed to use, I'm sorry, we're supposed to use FIFO because we did LIFO on the last problem. All right, so if we did FIFO, so everything would hold up until now, but if it's FIFO, and you did it correctly for LIFO, if it's FIFO, what do we do?
you would do from like the last purchase.
That's right, yeah. So the last purchase was is 160,
Was 150.
right?
So you do 150 times 115.
Times, yeah,
And then 10 times 112.
so, right, so I agree with that. So what's 150 times 115?
It's 17,250.
Right, yeah. And then we need 10 more because we got 116 that's left. So 10 more out of
10 times 112.
which is the yeah. Am I mixing problems up here? No, this is LIFO. Was I doing this one? Hang on, it is LIFO. I'm sorry, I got confused. I mean, I'm so very sorry. I'm doing well, I'm typing in. Hang on, so I'll do it again.
Okay.
I got
Redo it again.
confused with the two problems. Okay, sorry about that. So LIFO, you did this already, so I won't make you do it again. So you have 140 units left, so we need 50 at 120. That's 6,000. And we need the next purchase, we need 110. We'll make you do that again because you did it right the first time and I followed you up. Purchase at 112, which, and how much does that amount to again? 110 times 112.
12,320.
All right, and then So if we add that, it's the 18, it's A, 18,320. All right. Well, we're gonna, okay, so that's that. That's under LIFO. So thank you, and I apologize. I'm looking at the, I just got disoriented. I'm looking at you. No good excuse for making errors, but yeah, I did, but I figured it out. Okay. I started to look at some of your numbers. I'm looking down here. I said, wait a second. Yep. So that's LIFO. And we did FIFO, so I won't go all, but we sort of know what FIFO is. So here's what I'm gonna do. So on 194, if it's FIFO, I'd still do the same thing, the beginning inventory plus purchases, cost of goods available for sale. That's the same on the LIFO or FIFO. The only thing that changes is ending inventory. And if it's under FIFO, you would start with the bottom, okay? Liam, what's the primary purpose of a company that uses LIFO?
Not sure.
Why do they use LIFO? Who knows why companies choose LIFO? Coley,
Companies use LIFO to lower their taxes.
that's right. So therefore, does LIFO end up with lower or higher net income?
LIFO has a lower net income.
That's right, you'd have lower net income. And so if you're gonna have lower net income, does that mean you'd have higher or lower cost of goods sold?
Higher cost of goods sold. Higher cost of goods sold.
You'd have higher cost of goods sold because it's an expense. Right?
Oh my God. I think you're on mute.
All right, there you go. Can you hear me now?
Yes.
So if I don't know what happened. So I have two computers. One just like blinked, but the other one kept going. So if I have higher cost of goods sold, does that mean I have lower or higher ending inventory?
It'd be lower, right?
It would be lower, right? And the way I would figure that out, I do my cost of goods sold calculation, beginning inventory plus purchases, cost of goods sales, minus ending inventory. And ending inventory is going to be lower under LIFO because it's assuming the oldest goods in periods of inflation, assumes the oldest goods are still on hand, you know, and then prices rise over time. All right. All right, let's see. Yeah. All right, chapter 10. All right, we'll go to I don't know who we're on. 1, 2, 3, 4. We'll go to you, Liam.
Okay. We're looking at 78, right?
Yeah, 78. Good. Yep. Yep.
Okay. I haven't gotten to this one yet.
No, that's okay. We'll figure it together. That's okay. You didn't have to do it in advance. This is still recording. Yeah, it's still recording. Okay. So how are you thinking about this?
Well, I know that you have to take 6% of 500,000, which is 30,000, and then
Yeah,
But I just don't know which entry it would be under. I'm trying to read through them all right now.
right. But so when it has an interest rate, what the 6%, for what period does the rate, if it says 6%, does that mean they pay 6% a month, 6% every 3 months, 6% a year?
It'd be annually.
Annually, okay, so 6%, so it'd be $30,000 a year.
Mhm.
So how much time has elapsed between when the note was issued and and what this problem is asking for?
Is it 9 months?
Well, it says it's a 9-month note, but it says it was issued January 1, and they're asking for the entry on June
Oh.
30th. Yeah.
What is January, February, March? Is it 6 months? I can't do that.
Right, it'd be 6 months, yeah.
Okay.
And now it's, yeah, go ahead.
Nope, I'm not saying anything productive.
No, that's good, okay. So now it's 6 months, so now, well, I would probably want to give you this because all the numbers are 15,000. I'd probably give you a 9-month number, 1-month number, an annual number, something like that. So now we know it's 15,000, but when you accrue interest expense, what's the entry? What's the debit and the credit, the account? Forget the amount.
When you, the debit, would the debit be interest payable?
No, interest payable that's a liability, which would be a credit, right?
Okay. All right, so it's either A or B. I'm gonna say that it's A.
Right, because it's A because you're accruing it. If you're paying it, it would be B, right? You're
Right.
just recording the adjusting entry, it'd be A. So what Liam did is it's $500,000 note, it's 6% interest, so that's 30,000 a year. It's for 6 months because even though it's a 9-month note, we're doing the entry for January 1 to June 30th, which is 6 months. So half of a year times half is 15. And that interest expense is the P&L item, the cost of borrowing money, debit interest expense, credit interest payable. And it's interest payable, not cash, because you're doing the adjusting entry. If you're paying it, it wouldn't be an adjusting entry, you'd just be paying it, okay? So let's say how about 88? This is a little.
Did you, sorry, your thing cut out.
Oh, yeah, I'm asking you for 88, and it's really the
Okay.
same kind, it's easier than 78, because we're just asking for the amount, which we calculated at 78, yeah,
So that would just be 6% of, was it 350,000?
right,
So that's 21 grand.
that's right, that's the answer there. All right, let's see, we'll go to Cassidy, 94.
Is it D?
Is it B or D?
I said D.
D, no, sales class, so if you go to a store, Cassidy, and an item costs $10 and the sales tax is 6%, how much you probably gonna pay?
So 6% of what?
10?
60 cents.
Yeah, so you pay 1060, the total 1060. And so when they record, let's see here. The screen isn't shared. I'm sorry. I had it. Yeah, that's fine. Okay, I'm sorry. I didn't see that. So you couldn't even see that. So here's what Liam did. The 350 times the 6%. So I had that little blip. But if I collect, so Cassie, if I'm the store and you pay me 1060, what entry would I make?
You would debit cash
Yeah, for how much?
for 1060.
Right.
And then you would credit sales revenue.
Yeah.
And then you would
How,
credit
how much would I credit sales revenue for?
for $10.
For 10, yeah.
And then you would credit sales taxes payable
Right.
for
that's what
60
I would-
cents.
Sales tax paid. And so therefore, 0.6. And what's sales tax payable? What kind of account is that?
It's a liability.
It's account, yeah, it's account liability, so it's B. All right. All right, so knowing that, if we did 95, a different version of it, what would you do here?
You would debit cash for 264. And
Yeah.
then credit sales revenue for 240.
Yeah.
And then credit sales tax payable for 24.
Right, that's right. Everyone got that? All right, we did 2 of those. All right, we'll go back to Maddie here. On, this was a tough one. Well, actually, this is sales, I was Cassie just because it's sales tax. So sales tax separately, so it's total receipts for October amounted to 36,750. Did you do this one? Did you figure this one out?
I said B.
Let's see. And how did you get B?
I did 36,750 times the 5%.
No, that wouldn't be right. That's probably not right. So,
Okay.
all right, so that's okay. That's okay. That's why we're doing this. I think it's so 36,750 is 100% of the sale plus 5%. So I would divide that by. Let's see. So we know. I would do this. So sales is X. Is X, okay? And we know this is algebra. The sales tax is 0.05x. So therefore, X plus 0.05x equals 36,750. Okay. So 1 point. Equals 36,750. So Cassie, how do I get X?
Divide both sides by 1.05.
Right, so X equals 36,750 divided by 0.105. Oops. And so that, and if you do that math, what's the math give you? What does it give you for X?
You got 35,000.
Even?
Yes.
Okay. And so if that's the sales, so sales is X. So now and you collected 36,750. Now what's the answer?
I don't know, D.
Well, no, it's, well, hang on. Well, if that's X and the sales tax is 5%, now I do X, 35,000 times 5%, right? That's the sales. Now you figure out the sales, now you can know the sales tax, 5%. And that is 1,750, okay? See that? So that's algebra. more than accounting, but that's how you would figure that out. You see that? You see that now anyways? All right. All right, now to Maddie on payroll tax. Back to you, Maddie. All right, so what are we doing here? So I don't know if you've done these or we want to, did we lose Maddie? I lost Maddie, so I guess I can't do Maddie. She's not even here anymore. Okay. So that, we're on to you, Coley. Jesus, it's 5 o'clock already. Hold on a second. How much do I have left? Oh, good. Oh. Okay, well, that's all right. It's a good session. All right, so how would you think, did you do this, Coley? How do you think about this?
I had trouble with this one.
So let's walk it through. Okay. So we'll go item by item. That's how I would do it. So salaries, what entry would you have for salaries? Just for that piece of it.
Salaries and wages expense.
Right, that's what I would do, yeah. So I'm gonna call it salaries and wage expense. Is that a debit or credit?
Debit.
Right, so that's that piece. So how about FICA taxes withheld?
Sorry, what was that?
Then what do we do with the FICA taxes withheld?
Would you credit the FICA taxes?
Yeah, I credit those as a payable, FICA tax payable, FICA tax withheld, or payable, same thing. Because you have to pay it to somebody, the government, the government. What would I do with medical insurance deductions?
You do the same thing, so you just credit the
Right.
medical insurance.
Right. Insurance withheld, which is a liability. Oh, I forgot income taxes. I'll go back to that. 4,500. How about the income taxes withheld?
Taxes withheld. You just credit those?
I credit those, right? Because that's also a liability. You have to give those. You take them out of their check, but it has to go to the government. So the withheld could also be payable, right? I seem to struggle with spelling withheld. All right. And this is on the payroll. What do we do with the unemployment taxes? Are those payroll tax? Are they employee taxes or employer taxes? Those two unemployment taxes.
And wait, employer.
They're employers. They don't come out of the so unemployment doesn't come out of the employee's payroll, right? So those would be a separate entry. I'd put those down here. That'd be payroll tax expense, payroll, right? It's not so I'm just gonna group those together for simplicity. So that's 2480, and that'd be payroll taxes payable. So now we still don't have any answers here. Well, actually, how do we finish this entry up here, Coley? I think I get this. I think I need a 0 in here. Hold on a second. Do it again. Salary and wage expense 120. So what's the rest of this entry?
Would it be the medical insurance?
No, we have that, the medical insurance here.
Oh, yeah. Okay.
So when we pay this, how much do we send to the employees? We
It
give
would
them
be
100. Go ahead.
that subtracted by all of the.
That's right. So that would be. So how much do those three things add up to, Coley? Do you know?
Um, would it be 38,680?
38,680, 38, so 81. So then the amount you pay them is the 81,320. All right, so the key here is you do both entries, okay? So if you subtract those, it becomes 81,320. So here's the first entry, and here's the for the employer entry. And so it's not a debit to salary wages payable for 79. It is the 81,320. And they probably, I think if you subtracted these payroll expenses, that would have been the 79,160, right? These employer payroll taxes. So that's the trick there. I'm not sure what the others are, but that's how we do that. All right, so I don't think I'm going to do another problem because it's taking a long time here. So I think I'll skip this one. It's the same sort of idea. All right, Liam, 122.
I said A.
This is how should this is it? Yeah, I think that's right. Right, you got the cash, but you haven't provided the service yet. You're not going to provide the service until they come and stay. So you haven't earned it yet. So you credit this presumably current liability unearned service. So I think it is A. All right, how about the next one? This is from the bonds. Yeah.
This I think I think it's A, but
The market interest rate for the bond is higher than the status. No, it won't be A. I think it's going to be B. Okay.
Yeah.
So if a market rate is higher than the rate that's in the bond, then the bond's not worth as much as the face.
Okay.
Like if it's not paying market, you're going to get less proceeds, right? So and which gives you a discount. All right.
Right.
And I did put a little video up on bond premium discount, and it's not going to be a major focus of points on the exam. But I did put a video up yesterday. I emailed that to you, so I'm not going to focus on it too here. But let's see this. 157. William, we'll stay with you.
If the market.
It's just the opposite. It's just
I don't really know. I don't know.
you can take what I just said on the previous one without a number and apply it here. So in this case, the market rate is lower than the rate that the bond's paying. So you sell it at a premium. It's greater than the face value. Okay. Again, I'm not going to focus too much on here. Well, one more here. It says my internet connection is not stable. That's probably what happened.
Do that one.
Yeah. How much interest will be paid on an annual basis in this example?
I don't know what is A10M. What?
A $10 million bond sold for
Okay.
9,800,000. When the
Okay.
market rate was 8% and the bond's contractual rate was 7%.
So how much interest is paid on an annual basis?
Yeah. There's lots of numbers.
Yeah.
Yeah.
I'm not sure.
That's okay. So when the paid is always the face value of the bond 10 million times the contractual rate. That's what's paid. Okay.
Okay.
All right. We'll move on from that. So we'll go back to Coley. We're in chapter 11 here. Let's see. Oh. All right. Let's see. What do you think on this, Coley? 78.
For 78, I said C, paid in capital in excess of par value would be credited for the 1,800.
180,000. Yeah, you are right. That's correct. So how did you get that?
I did 6,000 times 5 to get
Hang on a-
30,000.
Hang on a second. I think I might be getting my phone's giving me a warning here. Tornado warning. Holy cow. All right, well, I just got a tornado warning. So if I go flying away, wasn't my choice. Okay. Tornado warning. Okay, I hope it doesn't hit my house. So I'm sorry, to interrupt, but my phone was making that noise. Is that someone else's phone? You get a tornado warning too?
Yeah.
Okay. You guys want to take shelter? Feel free to take shelter. I don't want to. If you want to keep going, if you want to take shelter, I understand.
No, I'd rather do well my accounting exam.
That's right. If I do survive, I want to do well in the accounting exam.
Exactly.
Yeah. All right. All right. So Coley, so you had the right answer. I interrupted you with the big beep.
I did 6,000 times 5 to get 30,000.
Right.
And then I did the 210,000 minus the 30,000 to
right.
get 100 and
And you did 6.5 because that goes because we call common stock. So we received cash of 210,000. I'll leave the zeros out. Coley credited common stock for the par value, which is 30,000, which is 6,000 times 5, and then APIC is the difference, or paid in capital in excess of par value, right? I shortcut it with APIC, additional paid in capital, and that's right. Coley, 102.
for 102, I said, see, it decreases by 700,000.
That's correct. And then how'd you get that?
I did the 20,000 times 35.
That's right. 20,000 shares times 35. We don't worry about par value on treasury stock transactions. They try to follow you up with this, right? And it's a decrease. Why do you choose decrease versus increase?
Because isn't it true that like treasury stock reduces like stockholder?
That's right. It's a contra
stock-
account within stockholders' equity. It's a debit within stockholders' equity, which is normally a credit. So 103 is the same concept, so I'll skip that. Oh, there's thunder outside. I have thunder. But the answer here is 3750. It's the same concept as it'd be decreased by 750, 30 times the 25. 104. We'll just stay with you until then we'll get the 104 will be your last one here, Coley.
Would 104 be a deduction from total paid in capital and retained earnings?
That's right. It's at the very bottom after total paid in capital and retained earnings. Very good. All right, so we've got let's see, Cassidy, I guess it's you. Issue 90,000, given this information, let's do the journal entries. On March 1, what do you have for that? Well, we can do it, if you don't have anything, we can do it together.
I did like half of this because I was confused on how to do
That's
it.
all right. That's why we're doing a review session. Never a better time to be confused. It's a lot better to be confused today than a Monday morning, right?
Yeah. I debited cash for 90,000, but that's probably not right.
Yeah, that's, well, we issued 90,000 shares of stock for 675,000. So what's the cash?
Yeah.
How much
That's
cash?
probably-
675, okay.
Yeah.
So what would you
And
credit?
then
Go ahead.
you credit common stock
For how much?
at the same amount.
Would you?
I don't know.
Well, it's pot, we put the common stock at the par value. So the par value is 1, okay? So we're gonna debit common stock for 90,000, like 90 times 1, okay?
Okay.
And then the difference is additional paid-in capital, which is, if I do the math, 585. Is that what you got, Coley? When you did this?
I had trouble with this one too. I didn't get there yet.
Okay, so anyway, so that's the first entry. Then I declare a cash dividend of $2 per share. How much is my dividends? First, how much is them? How much are they? And any of you three can answer this, yeah. Don't leave Cassidy on an island. So who gets dividends?
The stockholders.
Right, so, and it's based on the shares outstanding. So if I'm paying $2 a share, then how much am I gonna pay?
Oh, are there 75,000 shares outstanding?
To be at the beginning, yeah.
So with that, you do 2 times that.
Well, but since then, we issued 90,000 shares.
Okay, so should it be 90?
So at the time, it's time, so you issued 90,000 shares in March, yeah. It should be 75 plus 90,000. That's the number of shares that are outstanding at this moment.
Okay.
So it'd be 165,000 shares at $2 a share, be dividends of 330. So when I have dividends of 330, what's my, and it's just declared, what's my entry?
I'm not sure for dividends.
Anyone, what's the, when you declare a dividend, what's the entry? Anyone, Coley or Cassidy?
Is it like dividends and then dividends payable?
That's correct. So 330, dividends payable. The storm is right over me. Now, Cassidy, then when I pay, then it says that's when I declared it. And June 30th, I pay the cash dividend. What's my entry?
You would debit cash dividends payable and then credit cash.
Right. Cash dividends would be fine. I'm just showing it to dividends, right? 330. And credit cash. All right. And then, well, actually, we just did this. I'll stay with you, Cassie, because you did this on a couple of entries before. If I purchase 10,000 shares of common stock for $18 per share, what's my entry?
You do 10,000 times 18 to get
Yeah.
180,000.
Yeah.
And then you debit treasury stock for 180,000.
Yeah.
Then credit cash for 180,000.
Right. All right. Now the trick here is, now I pay dividends of 250. So how many shares are outstanding at this point in time? Any of you? Maybe you three troopers that's stuck on. I have to say, I'm having the smallest review sessions ever this semester. Usually I have like 10, no, I don't usually get the whole class. I usually get 10, 12 people, but that's, c'est la vie.
So you would have to add 10,000 shares to what did I shoot? I forgot. So it's 90,000 plus 75,000 plus another 10,000.
Is it plus 10,000 or minus 10,000?
Minus. Sorry.
It's minus because we bought them back, right? So they're not outstanding. So that's 155,000. So
Mhm.
dividends, so 155 times 250.
Just 387,500.
All right. And then dividends payable. 387,500. And then the last one is declare the dividend on the preferred stock at the end of the year. Accounting problems must make Cassidy happy. She's always smiling. It's good to be smiling. Always better to smile. So how do you calculate dividends on preferred stock? Anybody?
Would you use the annual dividend rate
Yeah,
on the, since there's, I'm just reading from the top, there's 6,000 shares at $5 par value. So I don't know what you do with that 8%.
you would multiply it times the par value. So the total par value is 6,000 times 5, 30,000 times 8%. So that'd be 2,400.
So that would be the dividend.
Yeah, preferred stock dividends. Oh, where'd the paper go? Honestly, something's going on with my computer. I can see it on the other one, but where I'm doing this work on, it's sort of disappeared. But it would be debit preferred stock dividends and credit deferred stock dividends payable. Okay, for the 24,000, and you do it on the par value. The trick is that even though the par value was 5, they sold it for 7. But you do the annual rate times the par value.
Okay.
All right, let's see here. Stop the share because I've lost the share. All right, let's see. All right. Then the other thing I'm going to do, and I think I'm going to stop it there, but you're going to have to know what accounts go in equity and what order they go. So you should just look at a problem. This is going a little longer. But well, if we had to put these in order, how would you put these in order, I guess? We'll go first. I'll help you. It would be preferred stock, the par value, the common stock par value, any excess, then that would be total paid in capital. And then the APIC, or the paid in capital in excess, would be par value first, then common stock, total excess paid in capital. You add the total paid in capital plus the excess, that's total paid in capital. Plus retained earnings, you add those up, that's total paid in capital plus retained earnings. Subtract the treasury stock, and that's stockholders' equity. So what you're likely to see is a bunch of accounts to have you make an income statement and an equity statement. This is a good tip for the exam. And some accounts won't belong in either of those statements because I'll throw in some balance sheet accounts, right, or some other accounts. So you have to do a multi-step income statement and a statement of shareholders' equity. All right, so that's it. But if you guys have any questions, you want to cover something I didn't cover, now's the time. You guys did, you three, did pretty, seem to grasp a lot of it, so that's good. Given that there's still 36 hours plus till the exam, so.
I think I'm good. I don't really think I have any questions.
Hearing no questions, absence of
Yeah.
questions. All right, well, thanks for joining. We'll see you bright and early. We're Ryan 102, right?
Yep.
All right, have a great weekend. And who's going to the hockey game? They're playing UConn tonight. You got to beat UConn, right? So, did they win last night against AIC?
Yeah, they did.
Okay, that's good. All right, well, we'll see you Monday morning. Okay, thanks for joining. Take care.
Yep. Thank you so much.
Thank you.
Bye-bye now.
Thank you.